Alright traders, you're welcome back to this particular video, and in today's video I will be explaining what is order block for you. If you have been trading the smart money concept, you might have heard about order block. You probably have even taken trade with an order block. It is one of the most popular institutional reference point. But what exactly is an order block in this sense? Now, the word order block is a compound word. We have the word order and a block. All right, they are two different words. So the word order is basically somebody's open interest to either buy, all right, or to sell. So the word block also means a large financial transaction. Every time you hear about a block trade, it's basically a large financial transaction. So the word is supposed to be block order, large sell, or large financial buy or sell. So that's basically what an order block is. But how do we spot an order block on our chart is the next question we'll be asking, and that is exactly what I'm going to show you here. Now, every time we see price moving up like this, pushing, creating higher highs and higher lows, higher highs and higher lows, we believe that the institutions are playing a vital role in price movement. All right, so at every point that price moves in this particular uptrend, we see price coming back to a point and then a sudden move in that direction, price coming back to a point and then a sudden move in that direction, price coming to a point and then a sudden move to that direction, price coming to this point. So each of these points that creates a very significant move is a zone where there is a block order. It is a zone where there is a large financial transaction by the institutions. All right, now just like I told you, we have a bullish order block and a bearish order block. The same thing with your other institutional reference points, and the name comes out from the action that price takes after it reaches that particular point. If price decides to go lower after hitting that zone, it becomes a bearish order block, and if price decides to go bullish, it means we have a bullish order block. It is just from that bearish movement and bullish movement. All right, so a typical example of an order block is right here. We'll subsequently talk about things like what makes an order block a valid order block or what makes an order block less valid. But what we have right here is basically price coming to this point, retracing, and look at what happened. Price pushing up, creating a break of structure, which is one of the things that makes an order block a valid order block. Now, in this regard, as price was coming down 1, 2, 3, we will realize that price printed a sell candle that was later quickly engulfed by a bullish candle that is next to it. Look at how price did. Price came right here, printed down to the lowest area, all right, to the lowest area, and quickly coming back. Now we have a bullish candle that completely engulfed this sell candle, which makes it a valid order block. And from here, you can see price coming, even creating a break-off structure. Now, it is this particular sell candle that we will map out like this to this point and wait for price to come back into it. Look at how price came back into this. So you're going to map everything with the wicks and the body, everything. The entire candlestick becomes your bullish order block. I'm going to show you how to map out some of the order blocks, but this is the rule of marking an order block. Everything will be mapped out, and the rule is that as price comes back to touch this particular order block, you're going to take your buy from here to that area. All right, so every time you see this becomes your bullish order block because price is expected to touch it and move up again. So if price creates another break of structure, it means that particular order block, this one has been mitigated, which means the order here has been fulfilled or it has been filled. So the next thing we want to look out for is to look for another zone where price can use as our order block. All right, Now look at this. This one also created a breakout structure. Look at this particular order block right here. All right, this last sell candle that pushes to the lowest part right here, look at it, creating a breakout structure, leaving a fair value gap. Now it is known that every time we see an order block that has a fair value gap very close to it, it is a high probability order block, which means it has more potential to push price upward than an order block that does not have a fair value gap, just like this one. Let me show you. This particular one does not have a fair value gap. Now, I've explained fair value gap in the previous video. You can watch it if you have not watched a fair value gap. So you can notice that we don't have a fair value gap right here. Now, price came back to the zone. Even though price did not touch the order block, price quickly came to this area, this entire zone, and hit that level to move up to that side. All right, notice what I said. Price closes or engulf this particular sell candle. Another one is this. Let's talk about this one. Now look at this particular one that price printed before moving up again. So this last sell candle, now you will notice that this green candle pushed even lower than this guy. So as you look at this area, it is your zone. I normally map out with the wick of the order candle. That's my own rule of marking it. But the order block is this last sell candle. Now it is okay for price to have more than 1 or 2 candlesticks that closes above the order block. All right, you can have 1, 2, even 3 to 4 bullish candle that completely closes above it. It is still a valid order block. All right, so in marking the order block, you can mark out just this black candle, that is the sell candle. But in my own rules, I will just map out including the wick of the order candle that is lower than this. If you notice something, you will notice that this particular green candle is lower than this. So I will just map it out, and that it becomes my order block where the order was taken. It is just a zone. It is not about candlestick. It is the zone that price came to. So look at it. It created a breakout structure. From here was where price moved and created this breakout structure. And we also have a fair value gap very close to the order block, which makes it what? A high probability order block. As price was coming back, it just touched this order block and it moved up to that level, including this area coming to create a breakout structure again. All right, so I'm teaching you this. Now price coming back, look at this. Price came back crashing into this area, which means we have shifted structure from this side. So this is not about market structure shift. So this was your order block that created the move to that side. Let's see more and more order blocks. I've just showed you everything about a bullish order block. Let's see if I can see a bearish order block I can give you an example with, so you can see what it means to have an order block for trade entry. All right, so look at this. Price was coming up, and it had a high here. This is the highest level price came to. All right, and as price pushed up from here, it pushed up to this area, creating a breakout structure, which was the last sell candle. This guy was the last sell candle. But part of my rule of marking, I'll go to the lowest candle that has the lowest wick, and the entire area becomes my order block. I will show you the reason why I do that subsequently. But if you are marking the order block based on smart money, this is basically your order block. But I would love to map out including the wick of the candle and watch as price comes back. So notice how price came, and price did not even take the low of this sell candle. Notice how price did it. Price did not take the low of that sell candle, which makes it more believable. All right, more believable. And this one has engulfed it, closed above it. So that makes it a valid order block. Look at how price quickly went up from there. So let's look for a bearish order block, and then I will show you how it also works. All right, just a very quick one right here. Can you see price coming, having this? Boom. price quickly moved away from that area. Let me show you this particular area. All right, we have a break of structure. Now, which one is your order block? The last bullish candle that price printed before creating the downward movement, so becomes your bearish order block. So if price is coming back, we want to see price come and hit that particular area. And you can see part of my ruling, I will just map out including the high of the highest candle in that area. All right, so that is my own personal opinion, and I'm showing you because it will help you eventually if I start to show you the different kinds of entry. So price coming back, hit that level, boom, it went downward from there. Let me look for more bearish order block, and then I will show you how powerful they are. All right, look at this. This one too is a bearish order block. You can see it, this very big green candle. All right, look at it. It created a market structure shift right here, and price coming back to touch it right here. Right, boom, price went down from there. So basically that is what an order block is. It is a zone, or it is a point where the institutions showed up. They showed up, and you will see price moved away from that level immediately. All right, I hope this is explanatory enough. Watch for the next video and we will continue the explanation. Thank you for watching, guys. See you there.